Welcome back, and joining me now to share his commentary on the day's market performance is Andrew Padoa from Sasfin Wealth. Andrew, thank you so much for your time this evening. So precious metals are seeing a corrective bounce, and that of course working in our benefit. What's been fueling safe haven demand today, or is it just a recovery?
I think it's just a recovery. It's the same kind of story we've seen for the last 12 months or so. I think there's just concerns about, the power of the dollar. We've seen central banks around the world selling their dollar exposure and buying gold instead. So, it's great for South Africa because this is what we sell to the world. So we're right place, right time. We haven't done anything amazing, but we'll take our wins. So, yeah, green across the board, not just resources, but even financial. So it was good to see.
And talking about taking our wins, the miners also benefiting from that high yellow metal price. Let's start off with Pan-African Resources. Stellar numbers out of the miner, benefiting, of course, from the gold boom, which helped it de-gear and declare a maiden interim dividend, or a maiden dividend. What caught my eye there was the all-in sustaining cost as well, at around $1,700 versus where gold prices are at.
Yeah, absolutely. Well, revenue up 157%. But I think these results were when gold was at $3,800 an ounce. So they were profitable then. Now we're at 5,000. So, we can still see some stellar numbers from these gold companies as long as that gold price kind of just hovers where it is now. It's the same for DRD as well. These gold companies are leveraged to the gold price. If gold maintains at $5,000 an ounce, these guys are going to be printing money in 2026 as well. Yeah,
and any concerns around DRD gold, because we did see volumes productions sort of slipping. Of course, the group, being cash flush, is reinvesting the money and putting it towards capex into its Vision 2028 strategy. But any concerns when it comes to the production picture?
So off the top of my head and toweling, DRD is not a stock I follow too closely. Our preference would be Anglo Gold Ashanti in that space.
Okay.
I think they just seem to be kind of the lowest cost producer. But just while we're talking about the sector and kind of valuation, so if gold stays where it is, Anglo Gold's on a forward PE of 11. That's very, very cheap. So I think these gold miners are still going to do nicely, as long as gold stays where it is.
All right, let's look at the diversified players. Glencore out with numbers as well. Copper doing quite well and offsetting what some of those impairments we did see out in its SA coal business. Talk to me about those numbers and what you're making of the group's comments around copper and consolidation and acquisitions on that front. It seems like it's following a similar path or similar comments that we got out from BHP yesterday, where they are looking inside. It's more about organic growth.
Yeah, I think that's fair. Look, the results from Glencore are almost a tale of two halves. It was kind of an anemic first start to the year, but the second half really started to do nicely. And then, like you said, it's their big drive for copper. Copper is going to be the big growth driver for the likes of a Glencore. So I think we were more excited about just where Glencore's going from here. And it's going to come down to execution. And I think Billiton's also picked that up. This move to copper and some of these new energies that the world's going to need with the AI build-out that we're seeing, it makes sense. But now it's just going to come down to the execution.
All right, quick comment before we move over to economic data. Does this suggest that perhaps we won't see as much consolidation in the mining sector with these counters looking at organic growth?
Yeah, I think that's a fair point. We'll have to wait and see.
Okay, let's move over to economic data. We got, as I mentioned, inflation easing, retail sales growth slowed over the festive season. A bit of a shocker considering the numbers we saw out in November. I know these figures, of course, are different and speak to different months, but talk to me about what they say about the health of the consumer, and also just comparing it to some of the trading updates and the sales updates we've gotten from both the clothing retailers and grocery retailers not looking good as well.
Yeah, I think that's fair. You know, we've seen inflation. We can chat about inflation first. Inflation at 3.5%. That's great to see. Inflation is under control in South Africa. That's super important. We've got low fuel costs, which is great for the consumers. You know, I filled up with petrol this morning. Couldn't believe how cheap it was. It was a fantastic surprise. But on that inflation side, meat is very expensive. I think meat was at 13.5% year-on-year inflation.
Yeah.
So that's kind of bringing it up. I think beef steak was 30%. So the foot and mouth outbreak that we're seeing, I think that we're starting to see that now in the CPI numbers. There's obviously supply constraints and beef up 30%. So there's different things going on. Inflation, meat's expensive, oil down. And then on the retail side of things, yeah, I think what we're seeing in South Africa, the positivity, it hasn't really passed on to the consumer. The consumer doesn't have extra money in their pockets. I don't know if they're spending it on gambling, or I think that's a factor as well for these discretionary retailers. It's tough out there. But yeah, it's a hard environment for the retailers. I think it's going to turn. It's just a matter of when. Maybe not now, maybe in a couple of months, but the retail stocks are looking very cheap, and we have to pay attention there.
All right, we've got about 20 seconds to go. Where are you seeing value right now? Your stock pick.
I'm going for a South African retailer. I'm going for Clicks. They're on a forward multiple of 21. They're normally between 25 and 30, so they're cheap compared to history. Yes, they're retail, but it's defensive retail in that pharmaceutical sector.
All right, let's leave it there. Andrew, thank you so much for your time and taking us through trade this evening. That was Andrew Padoa from Sasfin Wealth.